After weeks of damaging headlines, today there was some better news for Babcock Brown investors. It's been reported that B&B Wind Partners could get more than $3 billion from the sale of its European assets. Two firms are believed to be potential buyers.
The critical point is it highlights the fact that the underlying assets aren't the problem. Obviously, when you're looking at a situation like those wind assets, they actually should be looking fairly attractive in the current environment where you've got very high coal and oil prices.
Babcock Brown refused to confirm the reports and says the process is only at the indicative bid stage. Babcock hopes the sales will unlock value in the assets that it argues is not reflected in the listed company's share prices. But BBY's Peter Rice says the Babcock company structure is flawed by having a listed vehicle between the head entity and the group's assets.
It's just this structural issue where they've left themselves vulnerable to an attack by having traded stocks that aren't particularly liquid, and therefore there is a bit of susceptibility to having the price hit quite hard, and that having an impact on the parent company in terms of potential write-downs in the valuations there.
And that could flow through to the head entity's reported earnings at year-end. Shareholder activist Stephen Mayne says the key for the group will be whether the sale process gives the head entity enough funds to retire debt.
There is talk, credible talk, of a $500 million clear net profit from such a sale. Now, if Babcock can pull that off, that would be quite a coup, and it would relieve a significant amount of the pressure.
Babcock Brown shares jumped 16% today following yesterday's 13% gain, while several of its listed funds also surged. Analysts say the Babcock Group's turnaround in the last 2 days is largely because hedge funds have stopped short selling.
We're now in a situation where some of the brave investors, I guess, are looking at the underlying assets and taking a bet that Babcock Brown will work a way out of this, and on that basis, it looks a bargain.
But it's got a long way to go. It's still 80% below the $34 peak from last June, and it's still only half the level at which Babcock raised $220 million just 3 months ago.
The key now will be whether Babcock Brown can restore its market capitalisation above $2.5 billion in the next 4 months and stave off a review by its bankers.
But I think the biggest problem that Babcock has got is that investors in all of their various funds have now lost more than $4 billion. And as a fund manager, they're just not going to be able to raise more funds to manage, and they're going to struggle to keep extracting $300 and $400 million a year in fees.
Stephen Mayne says while the Babcock brand has been damaged, the group is likely to survive, but in a much smaller form.